A week full of hard-hitting data is ahead. Economic growth, jobs, 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 and more. Let's dive in. Before we begin, remember to like this video and subscribe for more economic updates. This week, the most awaited economic report is the government's main non-farm payrolls report for October. On Friday, the Labor Department is expected to announce that only 108,000 jobs were added this month, a nearly 60% drop from the 254,000 jobs added in September. However, analysts note that up to 50,000 of the expected job losses this month are due to Hurricanes Helene and Milton. The unemployment rate is expected to stay at 4.1%, making October the fifth month in a row that the official jobless rate is above 4%. On Tuesday, the Labor Department will release the September Job Openings and Labor Turnover Survey, also known as the JOLTS report. The report is expected to show 7.9 million job openings on the last business day of September, about 100,000 fewer than in August. Job openings are still nearly 35% below the peak from about 2.5 years ago. Next, on Wednesday, payroll processor ADP will release the National Employment Report for October. The report is expected to show that 95,000 private sector jobs were added this month, which is about 34% less than the 143,000 jobs added in September. This would also be the lowest number of jobs added in the past year. On Thursday, the Commerce Department will release the September Personal Consumption Expenditures (PCE) Price Index, the Federal Reserve's preferred measure of inflation. Economists expect the headline PCE price index to rise by 2.1% annually, which is 1/10 of a point slower than in August. The annual core PCE, which excludes food and energy prices, is also expected to slow by 1/10 of a point in September, reaching 2.6% after increasing 2.7% in August. The September PCE data is not expected to change the outlook for interest rate cuts. Currently, markets are pricing in nearly a 95% chance of a 25 basis point rate cut next month. Finally, the Commerce Department will release more data this week with the initial estimate of GDP growth for the third quarter. The report is expected to show that the economy grew at an annualized rate of 3% last quarter, matching the growth rate of the second quarter. The Conference Board has significantly upgraded its forecast for third quarter economic growth. Previously, the board predicted Q3 GDP growth at only 0.8%. Now they expect it to reach 2.5%, driven by factors like increased consumer spending, higher household savings, and a strong jobs market. That's it for now. Make sure to join us again on Saturday when we let you know what actually happened. This is Devlin Steele for Augusta Precious Metals signing out.